What's up, guys? I'm Mike from StockedUp. In this video, I'm going over whether or not it's a good time to buy stocks and potentially hold them. And the answer is it depends. So if you plan on buying and holding stocks for the next 10, 20, 30 years, then yes, now's a good time to buy stocks. So if we go to a chart of the S&P 500, we'll go to a monthly chart. You can see that we are obviously in a big dip right now. And, over the next 10, 20, or 30 years, the market has a very high chance of going back up. However, if you are thinking about, buying stocks now and then potentially selling them a year or two later, then, the odds aren't as high. So the thing is I've been getting a lot of messages lately like, the market's falling. Is now a good time to actually buy stocks instead of options? And like I said, it depends. If you want to hold 10, 20, 30 years, yes, it's a good time. If you want to hold, a year or two or shorter, then I would say hold off. So here's the thing. So we had two horrible months for the market, right? We had the fastest 30% drop ever, okay? And as you would expect, there would be, some sort of bounce back up after that, historic drop. And that's exactly what we saw. So here's the thing. We saw a huge drop down and now a huge drop up. So there's two things that's happening right now. So one, the main thing is that, people thought that when we go to back a daily chart, what ended up happening is obviously the market fell really bad, right? And when it started bouncing back up right here, everyone thought that was a bull trap, which pretty much means it looks like the market's going to keep going up, but actually it's going to keep going down. So everyone who made a ton of money off this drop right here probably bought puts right there and lost a decent amount. And now what's happening is a potential, another potential, another potential bull trap where people, think, okay, the market hasn't fell for 2 to 3 weeks, and the market, it seems fine. We're probably going to go back up maybe to 300, maybe 320 on the SPY. We'll have to see what happens. But here's the thing. We have earnings season coming up, and the coronavirus is still, it's still there. You know what I mean? So the thing is there's a lot of variables in the market right now and just a lot of uncertainty. So the thing is even when you look back at past drops and past recessions, they didn't just last a month and then go away, or 2 months and go away. You guys have to understand that, even if the corona situation, magically disappears in 2 months from now, which it won't, we're still not even really close to having a vaccine. Just say that the whole corona situation blows over, there is still a huge impact on the economy. So, just because these past 2 to 3 months, the economy is it's not in good shape, to say the least. The first thing is that, a lot of businesses have been shut down. There's a potential mortgage crisis developing right now. We're just on pause with the economy, and we have never seen something like this ever before. So, there's just a lot of uncertainty because we've never had a recession like this before. Technically, we went from a bear market to a bull market now. But the thing is, like I said, there's just a lot of uncertainty, and you probably don't want to, especially if you plan on holding for the short term, you probably don't want to buy right now. Like I said, because we just had a 30% drop, but as you would expect, there would be a nice pop up after that. But the thing is, there's a lot of uncertainty. The coronavirus is still there. There's still a lot of problems. And with the feds spending all this money with all these stimulus bills and grants and loans and all this, that is going to also affect the economy with potentially, some hyperinflation or, a lot of inflation in general. Another thing is, like I said, we might be in a mortgage crisis right now. It is still playing out. Everything's very new. Even the banks are very new to having this loan program. And you could see when we go to a chart of the S&P 500. So in 2008, 2009, the SPX. So actually, we'll go to the Dow. So the Dow went from in 2008 to 2009. The Dow went from about 14,000 to about 7,000. Okay, so it's lost about half its value. If we go to like JP Morgan or like another, let's go to like Bank of America, right? Another banking stock, right? Bank of America. In 2008 to 2009, it went from $53 all the way down to $3. You guys see that? So certain industries are going to be hit harder than others. But here's the thing. Let's say you do want to start investing for the long term. No one knows the bottom. No one knows the top. But let's say you want to start entering some of your position. What I like is I like value stocks when we are in a bear market. So, not every company is going to make it through this recession. Companies do go bust. But what I like to stick to is companies that have been around for hundreds of years and, 50 years, 80 years. Like McDonald's, they're a solid company. They pay good dividends, and they're probably not going to go anywhere with, a recession. They did just fine in the 2008-2009 recession, and you could see right here. I mean, in 2008 and 2009, McDonald's finished flat. You know what I mean? What other stock did that? I mean, the banking stocks lost like 90% of their value. Certain sectors are going to do better than others. McDonald's, CocaCola, same thing. Coca-Cola is not going to go anywhere. Another thing is I like AT&T. That's a good one. They have a very, very strong dividend history. But here's the thing. If you pick up Coca-Cola at a good price, you're going to receive a great dividend with that. McDonald's is good. Even some REITs like SPG is a good one. Simon Property Group's a good one, which is SPG. Pay a great dividend. Always good. Another great dividend one. So yeah, things like that. I just like to stick to value stocks. Like even Johnson & Johnson, great one. They did pretty well in 2008, 2009. Procter & Gamble, these stocks aren't going anywhere, and they're value stocks. You know what I mean? Like they have value, meaning that you're not going to see a 200% return on a value stock where you might see that in a more speculative and growth stock like Tesla. But that's just my thoughts. But either way, like I said, the main thing is if you are looking to invest for the next 10, 20, 30 years or longer, then yeah, now might be a decent time to enter for a long-term hold. However, I do not think we're near the bottom. There's still a lot of economic impact that the market has yet to, experience, you could say. The VIX is still high, pretty much means that, people are still pricing in a lot to happen with the market. We're at 41 on the VIX, which is it's pretty high. We were at highs of about 85, which is really crazy. In 2008, 2009, at the absolute peak, we had highs of 89. We were almost at that last month. But, there's still a lot of fear in the market overall, so keep that in mind. If you guys have any questions or anything, let me know in the comments down below. But other than that, thanks for watching.